Hi, good afternoon, everyone. We are here in our Treasure Week of Santander. This is our first version, our first live electronic live in this pandemic times. On one hand, we lose this contact with the audience, but on the other hand, we can access more people. So today we have simultaneous translation for the clients based outside Brazil. So I'll try to speak clearly in Portuguese so we can help the translation. So I didn't remember one thing when I was studying for this live, but I have three people here who are friends of ours. I worked with Felipe for some years here in Santander, and I also found out that Paulo and Ismael are also my colleagues from Santander. They worked at Santander, and so I would like to tell you that this is a very good uh, company and that works with successful people. Felipe Guerra is the founding partner of Legacy. He's a long-term partner. And also we have here Ismael. We have worked together in the best and worst times of Brazil, here in Brazil. And Paulo is a very important client for us. He's our partner in Apex Capital. He works with the equity area. So we decided to form this panel with different people. I'm responsible for Santander's desk, so I have some advantage because I see what you're doing because you're clients. And from our side as a bank, we are able to follow up all the flows, everything that is happening in Brazil and outside Brazil. But this panel here is complementary because Guerra has one of the biggest funds in Brazil. The size of his fund is big, and also his opinions are relevant. Also, he changes his ideas according to the market. Because you cannot have a conviction that will last longer with a volatile market. So now he is going to present the market in Brazil, also the funds industry that has undergone a big transformation because the markets are operated also outside Brazil. The industry is more sophisticated in foreign countries. Some time ago, a lot of people did the same things. But now we also are going to have here Ismael. He's going to present us our foreign view. When I started working in the international market, Brazil was in a good moment. Brazil was relevant for emerging countries. We had big inflows in Brazil. And now I would say that our situation is different, almost the opposite from some years ago. But I think Ismael is going to bring here some hope, and that we can have this resurgence of the emergency markets. The emergency markets are outside for a moment. It was a After the election in the United States, maybe we're going to see some changes in this area. Since the North American election is over, now it's easier to have a discussion here because some 3 weeks ago, we didn't have a clear scenario as we have today. So Guerra and Ismael will provide us a generic approach of the market as a whole, the emerging ones and the international ones, and they are going to talk about the stock exchange and the opportunities we have ahead of us. This live will have 1 hour, so they will have about 15 minutes each to talk, and at the end we're going back to summarize what we talked about. Now, I already talked to Guerra today in the afternoon. We have similar visions currently. We think the same. And Guerra, I would like to know about you. What if you believe that 2021 would be the year in which the emergent countries will outstand, if the funds will be allocated to Brazil, if you think about it, and if you see Brazil as an investment alternative. I guess our image for the world is not so good in the past years because we have been having difficulties on implementing reforms, and Brazil is unanimously seen as a cheap country. But we are not having this trigger, a trigger to make us less cheap. So we have more inflow of capital to Brazil. And I would like to see how do you see the situation on the short term, and how do you see the next year for Brazil? Now, Guerra is with you. Thank you, Sandro. Thank you for the introduction. It's amazing to be here connected with the bank. My career is all based on my work on the bank and after the bank. It's a pleasure being here with you, with all of you, with Paulo, with Ismael, a former client and also a good friend of mine that I know for a long time. Sandro is also my trading partner for some years. We performed an amazing work with the international bank, with the trading companies. I'll try to be straightforward here, so because we just have some moments, some minutes here, so I can show you my vision. I would say that this year is really atypical. We're needing flexibility. We cannot get attached to geographies, for example, different from 2016, 2017. We were optimistic with the country, but afterwards we had a good trend connected to Bolsonaro government and the economic team. So that was a convergence trend that we reduced the risk of Brazil. We almost only chose the assets and how to navigate on them. But now, at this year, everything is different. Now it requires mobility, agility. I would say that this year we have already worked on 7 different scenarios. After the carnival, everybody was panic. All the markets were changing a lot. The stock exchanges were very cheap. And then we acquired the knowledge of the disease, the COVID-19. We didn't know what was going to happen, about the recovery, how would be the recovery. And then we did a vertical approach. So we had to simplify our portfolio and diversify the portfolio during February and March. And then we started to recover our business, our standard business, using the fixed income and also associated to growth, and also the fixed income and the floating income, and then the weak dollar, the commodities, and the stock exchange as a whole, the emerging markets involved. So we navigated through those phases throughout the year. And now I can explain to you how we recovered along this year and all about the performance of the business. We have been seeing the last month, since the mid-year, the last semester, we are optimistic. We have been seeing a lot of noise and confusion and misunderstanding concerning the disease, also the elections, and also Brazil, emerging countries. But at the end, the important part for us is because we learned how to focus on what really matters. And what really matters for us is this perspective of a big investment on medicines and vaccines for us to leave this pandemic, and also associated with the fiscal stimulus, the tax stimulus from the government, which are extraordinary. So we have a big liquidity and the perspective of vaccines and medicines. We can see the light at the end of the tunnel. And we are going through this process right now. We have a V recovery. The economies are on a depressed threshold. We still have some time ahead of us because we work with global products. The unemployment is high still. So this recovery has to be certain so that the investors can return and do their investments. So now we are discussing on the desk about the liquidity and the stimulus. We have been talking to the main central banks on the world. They'll invest a large amount of money in the next months because of the liquidity we have currently, and this is positive. When we combine this with this perspective, this change of fiscal policy, the 2008 policymakers' focus was on the financial stability, and then they generated assets. The people with high income were more benefited, and the income was concentrated on one part. And now we have the inflation of assets in, with a more social focus. And this is to support the tax expenses from the countries. When you provide money to a lot of people with low income, these people will spend this money. In some countries, these stimulus packages were more exaggerated, and others provided more amounts for the people. Some other countries did a proper approach, like the United States. But this matter about putting money on the hands of people, and you generate a demand from the economy, especially from the point of view of materials, raw materials, and food as well. And this is all, everything is combined with something else. The capex expenses that have been used on commodities, everything about the environment. We have this capex invested on the energy area, and also minerals and mining. Each one has a different story, but when we add all this together, and after this coronavirus shift with this stimulus package, at this moment that we have a restriction of offer, it's a commodities boom that we have ahead of us. We haven't seen that since 2007 when we were working together. We talked about it. We used to make jokes about it, that was going to have a lack of food. This was back at 2006, 2007, at the time of the crisis. And now we have a scenario of a good scenario for commodities. And not only from the central banks, but also we have the problem of the offer. And we have this weak dollar movement in the whole world. Sometimes the dollar is weaker everywhere. So we have to pay attention to this. We are now heading to a vaccine. And so this scenario has been in position to face this. We have low interest rates. And also the short-term growth is challenging. We see some areas getting better, others getting worse, but we are actually reopening the economy with the vaccines, the low interest rates, so we can do a portfolio rotation, and we can have a weaker dollar. And this is the scenario we have currently. When we talk here about emerging countries, and we are based in Brazil, all the emerging countries will hitchhike on this global trend. The tendency is an appreciation of these countries, but we have to be selective on those countries because many of those countries they don't have a space for monetary and fiscal change. Also, the currency of those countries are more vulnerable. They have more difficulty to uphold with the short and long term projects. And another thing that derives from the scenario of low interest rates, very low interest rates for a long time, is the difficulty of building a portfolio in a world where, because before you could balance the fixed income with the variable income. And if something happened with the fixed income, you got some benefits with the treasury, and then you had a balance with those two incomes. So, and now with the low interest rate, we had this protection with the bank. So it's lower for the bank. All the assets will have more volatility. I think it's crazy right now to sell volatility in a market where you have a lower buffer of interest rates that you can include to your portfolio. This was a different year. Everything, a lot of things different happened, like the election, the COVID-19, the vaccines. But this volatility can be complemented, but it's going to be a high volatility still. So building a portfolio, buying volatility in the top side of the market, such as stock exchange and currencies and commodities, it's all too cheap. You can have an inflation environment with the growth. The stock exchange can grow, can increase too much, and the oil sector also can increase the prices. We hitchhike on this global movement. And about Brazil, Brazil within this context is not well positioned. It cut too much the interest rates, it spent too much money, and the volatility is high. So Brazil is an extremely cheap country. Our currency, real, is at the same levels of 2002 when we didn't have a reserve. The companies in Brazil, the local companies, they generate cash flow. They have an extraordinary growth now. They have like Petrobras just paid off his debt from some years ago. So the currency is depreciated, obviously. The currency can depreciate more.
I always say everything that's cheap is a little complicated. I think at the end, we are a cheap country. We have a lot to go in the interest field. The discussion here is if this is going to happen in January, March, if in December, we don't know. We need to formalize the process of interest rates. This process of normalizing the interest rates, the central bank has to lower that rate. This could be a positive scenario if we're in the agenda of approving reform. Stock market is adjusting at an impressive speed, and we have been talking about it. But it's too cheap. It's bizarrely cheap, especially commodities. Petrobras, JBS, they're generating cash flow tremendously. So this is a big opportunity to carry on. And commodities are increasing and increasing and increasing. They're rising and rising. Some days we look at it and oh my god, it goes up 10%. Petrobras is doing the same. It's very, very cheap. So this stock exchange, because it's very, very old, Brazil is benefiting from this cycle. In a more confused situation, you can look at a stock, some stimuli, and Brazil will land on some stimuli packages like Bolsa Familia. And we don't wanna sell Brazil. We're trying to buy Brazil. We're trying to find some triggers, some signals that we're going to get back on track on the reforms. So looking into next year, we are looking into the scenario to keep going. With the speed, I talked about commodities, and I think we're in a weak dollar cycle. There's some potential for the drop of the dollar, some conversion of interest. Some conversion of interest is happening, and this will provide some abundant liquidity. That's the trend. We'll see some more technical issues happening now, and I think dollars will drop. Not just comparing with real, but the dollar will decrease worldwide. We're seeing the depreciation of dollar, and the stock exchange will increase. And I think the interest will be there. The interest rates will be there after we have some more appreciated assets. Let me share my time with Arthur. Before going to Ismael, I'm going to do a bridge that has some more things that have to do with Guerra. First thing we need to think about of Brazil that I haven't seen is the mea culpa from some analysts of thinking about the monetary policies. We have seen some projections of inflation below 1%, thinking that the central bank would have to write letters to the Minister of Finance and ignoring all the risks. Central bank has expanded a monetary expansion in the middle of a fiscal, something that had never happened in Brazil. We are a country that hasn't grown in 5 or 6 years. We have seen a fiscal situation that was very bad. And we're having a sociological experience that's unique. When you inject money into people's veins, like the government did, look what happened. Look at the food market. Look at how these assets react. We have we have an inflation department here, and look at the vision that we have medium term. Because of the gap of the economy is still very weak, but it's clear to me that the country cannot survive with 2% interest rate. Comparing with the past, what Guerra mentioned, history is repeating itself, but this time a little bit different. We're entering a weak cycle, a weak dollar cycle, and these cycles are very long. We thought 2020 would be a weak dollar cycle, but then we had the pandemic. But if it wasn't for the emerging countries, all of the emerging countries are paying very low interest rates. If you come here with invest in Brazil with low interest rates, well, that's not a no-brainer like it was in the past. It's not that good. If you think about 2004 to 2010. So Brazil is on a trap. We have very well set external accounts. Our foreign accounts are good. We have corporate sectors that don't have any debt, any leverage. All the debt is local. My friends from the agro sector, they're very happy. They have never seen anything like that. Commodities are high. They're making loads of money. But that's very challenging on inflation. If you think about the past, we had a commodity cycle when we had a currency cycle that made up to that. So this could be an event of inflation along the next year. We will have a cycle of interest rates rising next year. I think it starts next semesters. I'm not sure about the pace, but it must be at least 4. I'm not going to say 6, I'm going to say 4. Because what BC did in the middle of the year, the situation of inflation was very different. We need to at least revert what was done. That being said, because fiscal is very bad, we have low interest rates, but it's hard to see the normalization of the monetary policy, how currency will react, how the fiscal numbers will react. So I want to tell Ismael to take the floor. I don't think he's going to agree. That's what I understand from him, but I want to hear from you. How will emerging countries being seen by other countries, by foreign countries? I know you work on a huge manager. Is the money coming in? How is Brazil ranked? We're seeing Brazil in a more passive or active way. Do you agree with Guerra on the weak dollar theory? And as you're a foreigner, you can confirm, because we talk about it all the time. All this thing of the image of Brazil outside, will the investor not put money in Brazil because of that?
Thank you, Sandro. Hello, everyone. It's a pleasure being here. Well, let's start about talking about the emerging markets. My vision is similar to Guerra's. If we take a look at the emerging markets in general, what really matters is the global activity. Also, the dollar, if it's weak or stronger, and also the liquidity conditions. So, these are the three main factors for the emerging markets. And the three factors, they are positive if you take a look at them one by one. At the global market, we had a big decrease because of the pandemic, and of course, it will return stronger next year after the vaccine. And one of the problems we had in the global trade was the economic policy of the United States under the Trump's government. So I think that Biden will go back to the decision of the rates. So this is a positive point. About the weak dollar, I agree with Guerra. We're going to see a medium and long-term cycle. Everybody started 2020 with a vision of the dollar that was weaker, but this was interrupted by the pandemics. But if you look at in terms of interest rates and growth, all those factors that were positive for the dollar some years ago, now it doesn't happen anymore. It's not true anymore. So these interest rates, the advantage that they have before, they don't have it right now. The foreign trade is recovering. We can see other countries catching up, which is the case of the United States. So this is a negative side for the dollar price. And also this all happened at a moment in which the dollar was high in comparison to other currencies. Another thing is about the central bank that provided never seen stimulus. We have never seen this in the economic policies. now they're going to try to follow an average inflation rate, which the name is divergent inflation target. And like Guerra said, we cannot make a mistake and lose. We have to earn with those mistakes. So this is all positive for the emerging markets. We have been seeing all that happening basically since, well, it started in the last 2 months, but it intensified after the election here in the United States. We have been seeing higher inflows, more clients interested, uh, mainly North American clients that were not involved in the emerging markets. And now they are telling us that they need better rates, that they have pension funds, these pension funds that need some return, and they couldn't achieve these goals before. So they don't have this available for them in the United States. So they're looking for other markets where they can find better rates for them. It's all very positive for the emerging markets. Of course, it's positive for us here at Pinko. But unfortunately, it's not so good to Brazil as it has been before. This is an important point. In 2012, in the last big cycle of emerging markets from 2009 to 2002, Brazil was a recipient of all this capital. Now we haven't been seeing this today. We are going to have a lack of capital because of this lack of inflow. We are seeing that the clients, they want to invest in the emerging countries. Of course, Brazil is relevant, but of all the amount invested, Brazil will not receive a big amount. The client purchases assets not because he likes the country or something like this, just because he wants a diversified portfolio. But the active flows that we call the crossover, the investors that can invest anywhere in the world, right now they are not looking for Brazil. I think this all the reasons are clear. One is the fiscal reform that is not happening, so it's disorganized. We don't have a perspective of return. The GDP that is, we don't know how to make a projection about that. We don't know about the fiscal policy. We don't even know the policy for next month on the fiscal side. And we also don't have a good interest rate. In the past, we had fiscal risks, political risks, but we had volatility, and we were compensated with select-based interest rate, which was high. So we had a return in the fixed income. But now, with the nominal interest negative, it's not possible to make it possible. If you think about a local investor in Brazil, this investor may invest in a CDI, or this person can invest on an USA bond that they have higher interests or rates. So they choose to invest abroad. And turning this flow to Brazil will not happen because of people are more conscious, but just because it will just happen naturally. The On the bright side, we have cheap assets. Our stock exchange is cheap, but we don't know how long will last. Maybe it will be cheap for too long. Brazilian real is cheap, maybe because we are having some problems with the external accounts, and we have all this fiscal risk involved. And the other assets, the credit CDS, and all the other assets that are part of this evaluation, they may adjust before Brazilian real actually adjusts. Maybe because the fundamentals have worsened and not because our currency changed, actually. So I don't think this is the time to invest in Brazilian reais. We are having other emerging countries are more interesting because they offer less risk and better rates in comparison to Brazil. But talking about sustainability, and let's talk about the monetary policy, we have been seeing an interesting idea about the Europeans talking about the ESG. And the ESG is now stronger in the United States, but in Europe it's stronger. And of course, it's a big weight, this area, but Brazil was in an initial strong position. Brazil was seen in from our internal ranking. We have an internal ranking, and Brazil was not bad ranked because Brazil has renewables energy, and also in the past 20 years, the Amazon was good handled. So this was important for the metrics, and Brazil had a good position. But now, with this index is getting worse, now Brazil is calling attention. Brazil is being asked when we meet with investors from other countries to talk about what is happening and how bad is the situation. I wouldn't say that we don't have investors that invest in Brazil because of this environmental situation, but Brazil is receiving less money. A lot of those funds, they have a rating, a score, an average score of sustainability above 7. Each country has a different score. And if your portfolio is above 7, it's okay. But if not, you have to buy from better countries. And Brazil is below this score. So if you want to buy a portfolio in Brazil, it is probably changing the balance from other portfolios. So if the assets are cheaper, the investors will not want Brazil if you don't have interest rates and if you don't have a score, sustainability score, which is below in Brazil for the portfolio. I don't think this is a problem that we cannot solve because Brazil has a relatively good position. It's below average, but it's on average. But of course, a long time we have a deterioration in Brazil. The fundamentals were not as good as they are, and of course they were better, but 2 years ago they are fastly deteriorating. So we are seeing some instability. If we don't have a change in the politics, this will not sustain in the future. So I agree what you talked about the central bank. I think that the central bank imposed a wrong interest rate. But I don't know if increasing this interest will be good for Brazil because we have some problems because of that in Brazil, and the debt is getting worse. And if we have a higher interest rate, this can be a trap because things can be worse. But the central bank is in the middle of the situation because they cannot increase the interest rates and they cannot decrease it as well because of this economical situation. And Brazil has this concern right now. We have this risk right now. And the risk balance, of course, the interest rate is important. We may have some chance, but the central bank may increase interest rates and cannot work for Brazil. So I will stop by now.
Let's go to Paulo now. You give us a more equity vision. Paulo, there's a discussion in the market, and some managers comment about it. Stock exchange wouldn't be cheap or wouldn't be talking to the other assets. What would that mean? If interest rates need to go up, the valuation of stock exchange needs to be different. I understand stock exchange has a very high curve maybe you should deduct this from the LTLB curve. You have a Selic base interest rate that is 2%. It's a little bit of nonsense. There's something wrong. That bugs me with some years. One rate is 4% and the other is 2%. I don't understand how that works. And how do you see that? Some people think that the stock exchange is benefiting in Brazilian reais. Maybe if you have a devaluation of the currency exchange, if that maybe would benefit Brazil. How do we evaluate that? Are we well priced? This is a macro scenario we talked with Guerra and Ismael. And the other is more related to you. Ibovespa is a bad index. The economy is diversified. We need commodities and banks, and those have suffered a lot. Commodities walking now, and banks are advancing as well, but we do not benefit from that because we don't have that in our stock exchange. How do you see that rotation? Do you agree with that movement? How do you see Petro, Vale, and etc.? How do you see the banks? Do you agree with our vision that this is changing, a little bit more pessimists for the banks? And some of the sectors that you like and some that you don't like. And do you agree with this vision that foreign investors may return to Brazil in 2021? We think this is something punctual, not structural flow, but I need to know your opinion on that. Thank you, Sandro. It's such an honor to be here with you and Santander. Great to be with Guerra and Ismael. Be close to my friends. Regarding the stock exchange, if you think of the Brazilian scenario that Guerra and Ismael that you guys talked about, I do think the stock exchange is cheap. Ibovespa is a little cheap, but there's space to increase. It may increase with the scenario that we are overseeing. But the stock exchange is a sum of different factors that not necessarily show the dynamics of the best sectors, the best companies we have in Brazil. Regarding interest rates, with interest rates going up, that could be bad for the stock exchange next year. I agree, because the stock exchange are long-term interest rates. Stock exchange doesn't really do short-term interest rates. That is for individual investors, and they are diversifying as a need. They need some risk investments to profit from it. So that helps some investors and companies that take short-time debts. If you think about CAPEX investments, some sectors also benefit from low interest rates, such as investment related sectors, platforms of investment that compete with banks. Even the stock exchange can benefit in the short term. But if you think of the valuation of the companies, this is correlated with long-term interest rates. That's what it counts for a BOV. If you think about exchange, if you think a strong real is good for stock exchange, I would say that depends. The all the exporters, commodities exporters or other assets, of course, a weaker real would be better, but a stronger real would be better for the stock exchange. They would be benefited as well, and this would be positive for low inflation on the local players. I would think a stronger real would be positive for the stock exchange, but that depends on each case. When you look at the index, if you think that the stock is cheap in Brazil, we have to say that the stock exchange is a real asset. They're all real assets. They're protections on inflation. So if you see a bigger scenario of inflation, a higher inflation scenario, you have companies that can price power on their products. These companies are protected and they should be protected. They can rise and rise even on a scenario like that. If you look at the composition of the Ibovespa index, we believe commodities are cheap. Vale, Petro. When we look into Vale especially, all the demands from China on iron mineral, what we expect on the offer supply. This is restricted and this will increase in the next quarters slowly. So we see this balance of offer and demand as strong. As Guerra has put, the multiple is still very cheap. We see this as a review on EBITDA. And the multiples, even though stocks have risen a little, is still relatively low. These multiples, if you look historically, this really call into our attention. If you look at minerals, we use this into projection. They negotiate at 3.5 EBITDA. It's very low. If you look at an absolute form relatively to the company, this is very, very low. If you look at free cash flow, their value, their market value in 1 year, all these commodity companies, they have generated over 10%, in some cases 20%. So the commodities on the stock exchange overall is cheap with potential of valuation. And they look like good investments to us. When we look into other sectors, for example, banks, we see that much more as a range than cheap. When we look at the range that they were 1-2 months ago, they were cheap. If we look at Bradesco as proxy, for example, we can see an ROI, of 13%, and they use it to deliver 18%. So we see this as cheap. Bradesco is now having 17% in our calculations, and when we look into these numbers, we're questioning ourselves, is this still cheap now or not? They're still dropping, of course, but not necessarily they're cheap if we look into the future. Competition is set, and it will intensify along the quarters and the next years. We do believe that this will be profitable on the next years. We believe that the return on equity on the sector will be lower than it has been in the past. Looking as it has said, there are a lot of companies that look cheap, but in our opinion will continue to look cheap. They can be value traps for some time. can be for bigger competition looking forward, or a market that has been threatened by technology. Could be companies that Brazil doesn't have any competitive advantage. So we do believe that some assets that look cheap, they will stay cheap. Ibovespa index doesn't reflect as other indexes in the world. It does. We have some large trends of technology that are growing in Brazil. Many large companies like Magazine Luiza and Mercado Livre that started outside. And it's still not a lot of, not very representative of what will be in the following years. We have seen some sufferings on this rotation regarding growth. But when we look at valuation on these sectors, looking for expectations of growth for next year, they're very attractive. So what happened, for example, in e-commerce, we had a huge penetration this year regarding retail, not only in Brazil, but all over the world. And this penetration was one-off somehow, but it brought many, many people that had never accessed, never shopped online, never tried that. They're on into this new world. And that can lead to some future growth. So this is still a sector with a very positive trend. Of course, valuation was a bit stretched, and at the right price will still be a great asset, a great long-term investment. If you look into a higher horizon, a longer horizon of 1 year and more, sure. Other good sectors are sectors of means of payment. We have some companies listed in Brazil and out. Software companies, many retail companies. If we look into that regarding on the potential of generating cash flow, especially if we think about the vaccine next year, some stores like Henner, those would be a good option. Multiples or DCFs. I think overall that would be it.
So now to end this live, I'll talk about what we have been seeing here in the bank. And also I'll ask a question to them, and we haven't talked about this question before, but I'll briefly explain what we have been seeing here in the bank. Despite the depreciated foreign exchange, we are not seeing this inflow in Brazil. Capaz is listening to us now. He used to say that the investors would come to Brazil and purchase factories, and we haven't been seeing great inflows of cash in Brazil. We have been seeing an outflow, a consistent outflow. We are going now to a period of a season period. The level of profits and dividends should be lower, so the dollar should still outflow, but it's frustrating for us to see this scenario. Our agribusiness clients, as I mentioned before, they are really happy. They have been experiencing the largest cash flow in the history. But this sector still doesn't create an economic dynamism. We have been seeing foreign investors, as Ismael said, we see this marginal interest of them on the last two months. And we have two groups. The first group is the real money, about they work with the pension funds and the first long-term investments. But we haven't been seeing nothing relevant. But the hedge funds and the real money, they have been investing on this interest rate in Brazil. They see these interest rates higher. The higher interest rates are something bad for Brazil. So when we talk to people who work in other countries and who work with funds, we have been seeing a very good fight on the fixed income market because some places think that the interest rates are going up, but the foreign investors, they don't know about the interest rates, how they're going to be in Brazil. So the curve is rolling down. This will give some emotion for us in our sector. And about the foreign exchange, Roberta works here in our FX desk. We have been seeing this flow in the BMX. We have been seeing some hedge funds trying to sell the currency. This is the macro scenario. And the big discussion about the FX and about the overhedge and the banking system, everybody is somehow betting that the banks will have to purchase significant amounts. So this will give some pressure. And we may see a relief of the foreign exchange next year. There are some economists that are pessimists about the reforms, but I see some growth here. And just to conclude, because it's about time, if we had this live last year, and I will ask you, what will be the 2020 trade? What's the ideal position? The people who said the right answer would say that buying dollar would be a good option because dollar was about 4 on average last year. Can you imagine who bought dollar at 4 reais? Now they had some profit. And also purchasing on the stock market of the USA. So I'll ask this to Guerra and Paulo and Ismael as well. I have two questions here. One is, should we buy or sell risk 2021? How it's going to be this year? And what's the asset, one or two, that we should have next year? So now, Paulo, you can say, should we buy or sell the risk, or what we should buy or not in 2021? So purchasing risk for 2021, being straightforward and about all the scenario we discussed here in this live, it seems positive for the risk assets, looking ahead at the next 12 months. But the assets on 2021, when we take a look at the technology sector, despite being not well represented here in Brazil, but talking about e-commerce companies and payment means companies and fintechs as well, and investment platforms. With all these companies, we can have a good story for 2021. And also looking at local companies such as retail, the clothing sector, they would be good alternatives for the stock exchange in 2021. So let's make a commitment here so we can have another live next year and see if your crystal ball projections will happen. Ismael, would you buy or sell, and what would you buy or sell or not? Well, I think we should buy. Honestly, if you ask this at the end of the year, everybody is going to say that you should buy risk because everybody's optimistic. So I think buying risk is good, and buying risk from emerging countries such as Mexico, South Africa, and Russia. I wouldn't say that this asset will not have a good, it will not be successful, but basically looking at Turkey and Brazil and Argentina, sometimes you have a macro positive scenario that helps everyone, but the situation may not be as good. And you realize all the fragilities involved. So this is not a good moment to look at the countries that are not organized politically and economically. And Guerra, what would you say? Would you buy or sell? It's difficult to ask this question to you because you are optimistic. But of course, we always expect growth. But I know that you're going to say that we should buy. But what would you buy and what you wouldn't buy? Well, it's a great question. And I guess I'll surprise you here with my answer. It depends on the time horizon. We have to adjust the trade horizon that we are targeting right now. So I would say that thinking about 2021, the best asset to buy would be volatility. I think volatility would be blank, and we have a low. We have several currencies and interest rates because they are actually too cheap. It's actually bizarre the price that we see in volatility. So we have an opportunity here. The interest rates on the USA top side, like we have here on Legacy, and we purchased that in the middle of the crisis with a 2% strike. Today we are closing at 160. So it's really cheap. The volatility of the top side in the interest rate is almost free. It's a gift. So the foreign exchange volatility and the interest rates cheaper. We may have an environment of inflation with growth. Thinking about 2021, we are going to buy volatility, and also we can manage all this business. I think it's too cheap, the foreign exchange volatility. We cannot even understand the prices right now. We are seeing a fluctuation in all the currencies, a fluctuation of 1% and others with 5 or 6. So it's a good asset to have in 2021. Currently, you don't have the fixed income buffer. You see a lot of optimistic people and people saying that everything is going to be fine. The problem is that we have to think about the portfolio composition. We need a good composition. We need to have a good composition for 2021. But the short-term horizon, thinking about the next 2 or 3 months, I think that the dollar will drop more than I think that the stock exchange will be higher. So talking about the Asian currencies and other countries, we can go in more details, but the Asian currencies, I'm more confident that the dollar will be weaker than the stock exchange will actually increase. When when we talk about buying bad companies to sell bad companies, this is bad for the stock exchange because it gets congestion in the stock exchange. But abroad, the good companies, they have a better weight on the decisions. So we may have an exchange of sectors, but the dollar, I'm pretty sure that someday we can wake up and the dollar may be weaker in comparison to other currencies. The investors, they are used to do the hedging of their own currencies because it used to be more expensive in the United States to purchase in the United States. It's too expensive. So at some point, they may wake up and decide to do a hedge. And then we're going to see that a Japanese fund an European fund, for example, that they are going to purchase a big amount of a certain currency. And maybe some of the currencies, they may not have a good liquidity and they may have a central bank big flow. So these have to be weighed because they may not be able to balance all that. So the weak dollar in the long term may happen, and I think the emerging markets will grow. But looking 2 months ahead, we will probably have a weak dollar. And for the next year, the volatility is free. You can just enjoy, take advantage of this in the end of the year. This will be a great opportunity. I agree with Paulo that we have large investments here. The technology sector, for example, at medium term and long term, is a very good trend. Like Paulo said, the e-commerce and iCloud companies and biotech companies, those companies, they grow 30, 40, 50% per year. The digital marketing companies as well. So we have to calibrate this so we can see this change of portfolios and this crazy rotation we see in the long term. So this is an opportunity. As Paulo said, banks may go to a threshold in which is the commodities may go higher. So I think that the appreciation would be a high performance of these companies I mentioned. So the tech companies, volatility is also important for us.
Wow, very surprising answer. I didn't expect that, but that's a good answer. I should have complimented people who bought dollars in the beginning of the year and bought equity. If they had volatility, that's what saved a lot of people, including us. We were in the middle of the crisis, and a lot of volatility of currencies and volatility of stock exchange, and that helped to generate an alpha and mediated with positions that were incorrect. That's a good point. I think Bruno is listening to me. Bruno works with me. Bruno Bernardes. You should keep your head cool down. If you have volatility, you can have a calm taken decision. And I agree with you. This is actually funny. Emerging countries never paid the amount of interest rates that they're paying nowadays. If you invested in Brazil, there was 14% of interest rate. Now you can't put up with that. So it's not probable that this stays low. This is never something that's easy to do. It's not really good. So the investors are still positioned in opposite positions. And the last thing I would add for the ideal portfolio is inflation. This is a theme that's growing not only in Brazil but in the world. We live without inflation for, I don't know, at least 10 years in the world, and in Brazil for at least 5 years. A lot of people know how to operate that and live in a world like that, but that's a game changer for next year. Everybody's very comfortable on buying, purchasing dollars. Look at what happened with Biden's elections. People who were headed in Brazil, they lost 10% in 2 days without even seeing. We have an area of shared operations where you compare different trends. You can buy risk, you can operate stock, you can buy dollars. That was very profitable, the most profitable trade in the last years. We have seen this trade going very, very asymmetrical. I think the dollars will drop and Brazil can benefit from it. And people will discover they're sub-allocated in other currencies. I think we have gone already 10 minutes over the time. We have left with some good ideas. Unfortunately, the market is closed now. We have to wait. And I would like to thank you all for being here. Thank you so much. We're available for other debates. Yes. Thank you. Thank you so much, Ismael. Any last words? No, no. Thank you. Thank you, Sandro. Thank you, Guerra. Thank you, Ismael. In the end of last year, we can talk again and see what happened. This will be recorded on YouTube, so you cannot lie. Thank you, guys. Bye bye.